Hello everyone, welcome to Global Government News. This first article up is called Peter Schiff, We're in the Early Stages of a Depression, and it was actually posted yesterday, August 9th, 2010. It's from the Motley Fool, or fool.com. It says in 2006, Peter Schiff, president of Euro Pacific Capital, offered what many considered to be an outlier prognosis for the economy. The exuberance would end, real estate prices would crash back down to earth, and consumers would revert to saving from spending. In short, a deep recession was in the works. This is as outlandish as it may have sounded at the time. He was right. 4 years and the worst recession since the Great Depression. Later, Schiff stands alone. Again, a bleaker diagnosis for the economy, an inflationary depression. Says in an interview, Schiff, president of the chief global strategist of Euro Pacific Capital, candidate for U.S. Senate in Connecticut, and author of the new book, How an Economy Grows and Why It Crashes, said he thinks the government policies, massive fiscal stimulus, and a zero interest rate policy have put the U.S. on track for a collision course. Please check out that article. The link will be posted. This next one is from World Report U.S. News. This was posted today, and it's titled, Why the Economy is Addicted to Government Aid. I would recommend you to check out this because this is another op-ed type piece. But I mean, I know why it is, because we're corporatists. This isn't a free market economy, and it goes in there and it talks about that, but it also says how people in the American public are basically, we're all addicted to government aid, but it's in such a way that we're addicted to it because of the existence of a non-free market economy and because of government. So we're depending on the government because of the government's existence. So it's a real kind of a sick cycle, and that's why me personally, I promote a stateless society, a totally free market, and then we can begin to talk about free markets, and people will then become more productive, their standards of living will increase, and then we can have a legitimate conversation about a free market. But until then, it's it's like this guy says, go ahead and blame it on whatever political party you belong to. Says, but a better uber explanation for our addiction to government largesse is that we like it and depend on it. The mortgage interest deduction frees thousands of dollars every year in a typical middle-class family budget. Says most Americans factor Medicare and Social Security into their retirement plans. No matter how much the wealthy gross about taxes and government interference, they sure didn't mind the federal maneuvers that helped produce an 83% surge in stock prices between 2009 and 2010. So go in there and check this article out. Like I said, I don't really blame the average Joe out there who's making less than $100,000 a year, or even the average Joe I would think would be making less than $60,000 a year. So so a lot of times they're going to depend on government programs, and that's why I said I don't like the system that we have with a Federal Reserve private central bank system, fiat currency, and fractional reserve banking, derivatives trading, all of this, dude. It's a recipe for disaster, and it exists, and it only is sustainable because of government bailouts. And so that's why you have this article coming out by Time, basically, saying that Obama is going to be coming out with another stimulus package. So they'll be coming back for more stimulus, and that's what corporatism is all about. So you can expect that, or they'll threaten the economy will do what it's supposed to do. If it was a free market, which is it'll right itself, and a lot of people will lose their jobs, and those who failed to compete efficiently will go under, but they'll bail out the same big companies. So moving along, this is titled Price of Oil is Going Up, and this is from oilprice.com. August 5th, 2010, I received another scratchy, crackling cell phone call from my drilling buddy in Texas, natural gas fields today. Says you can almost choke from the dust on the line. It says he told me that the BP Gulf disaster was turning the fundamental assumptions of the oil industry upside down, and that sharply higher oil prices were in the cards, probably $100 a barrel by the year end. It says major oil companies with deep pockets at risk were rushing to offload their existing offshore leases and partnerships in producing wells to avoid BP's potential $30 billion hickey. If nothing else, the majors have learned the liability caps are nothing more than wishful thinking. It says they can only speculate what a new round of eventual regulation will cost them. It says hedge funds looking for the next big play were willing buyers, but only at substantial bargains. So, and when the BP disaster was going up, I mean, it's pretty obvious. I mean, you don't have to have a crystal ball. You just know that there's two things that you're going to get out of that, right? One is you're going to have government regulation, more regulations, right? More focus on the biodiversity and the environment so that you can try to, again, come at the American public with a carbon tax. And then the third thing, of course, is that you can legitimize increasing your gas prices, your oil prices. When you have, not monopolies, but it's basically it's just the bank. What is it? There's only so many big oil companies, and half of them are to the royal families. So, and it's all based off speculation and not actual supplies and all that. Well, I mean, some of it is, but it's all just. That's what I said. The way the whole thing works is just coercion, manipulation, disinformation, psyops, provocateuring. So if you want oil prices to go up or down, you can do something. You just work your little dials here, and you can get a desired result. If you want people to be spending less on other things, you raise those gas prices. You mess with interest rates because you got a cartel on the issuance of currency and setting of interest rates. So it's a big crony system, and I think we all know who it benefits. Next up, House passes $600 million border security bill because they care so much about illegal immigration. The House of Representatives voted on Tuesday to send more federal agents to the border with Mexico to strengthen security, approving a measure the Senate adopted last week. But, they don't even have any powers to arrest anybody. It says the Obama administration has urged the passage of a $600 million program as the flow of illegal immigrants has become an explosive political issue that could play a role in November 2nd. So, they're playing politics. Hey, Freddie Mac says it needs $1.8 billion from taxpayers. See what I was saying? They have pretty much not a monopoly, but they're birthed from the government itself, and just a big blob of inefficiency. And this is what corporatism is. Mortgage finance giant Freddie Mac on Monday said it would need another billion in aid from taxpayers, bringing a total request since it was taken over by the government 2 years ago to more than $64 billion. That's right. They were originally government, and then they went private, and then they went back to government. Title of this is Productivity Weakens in Second Quarter from Reuters. Says business productivity fell for the first time in 1.5 years in the second quarter, and labor costs hardly rose, underlying the halting pace of economic recovery. And another Reuters article, consumer confidence falls in August versus July. This is from August 10th, 2010. Consumer confidence fell 2.5% in August from July as Americans remain unconvinced by government efforts to revive the economy. A report found on Tuesday saying that such, what is this? Unconvinced by government efforts to revive the economy. Okay, I'm not going to say anymore. From news.com.au from Australia, U.S. stocks fall ahead of Fed meeting. U.S. stocks retreated overnight as investors grew more cautious before the Federal Reserve's policy meeting and after reports that showed economic growth slowing in the U.S. and China. This is from the New York Times. Fed saying recovery has slowed will buy U.S. debt. The Federal Reserve acknowledged on Tuesday that its confidence in the economic recovery has dimmed, announced that it would use the proceeds from its huge mortgage bond portfolio to buy long-term Treasury securities. Says in buying new Treasury securities, to the tune of about $10 billion a month, a small fraction of the roughly $700 billion in Treasury debt sitting on the Fed's balance sheet. The Fed will not let the balance sheet shrink for the time being. Says the Fed had planned to allow the size of the portfolio to shrink gradually over time as the debts matured or were prepaid. Instead, the Fed will reinvest the principal payments in long-term security, and they will also keep interest rates from the 0 to 0.25%. It's been like that since December of 2008. Initial probe finds no new Toyota. Crackdown on energy use. China to shut down 2,000 factories. Thank you.